The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Robert in New Jersey. Hey, Robert, what's going on?
Hey, Tom. A great show.
Thank you so much.
For years. You got a great thing. I've been listening to you for over a decade. It's amazing. You've done a great job.
I appreciate it, man. Appreciate you growling and prowling out here with us.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Let's take a look at one of our quotes. This is by an unknown author. The start to a better life or a better world or a better future is simply to believe that it is possible. Market-wise, let's take a look at it out here. We have the Dow Industrials up 276. NASDAQ is up 78. S&Ps are up 26. Gold contract up $10.70, trading out at $1,304 an ounce. Silver up 26 cents at $18.46 an ounce. Platinum up 12 bucks at $1,285 an ounce. Copper down 3 pennies at $2.58 a pound. Light sweet crude off $1.09 at $46.71 a barrel. Bonds, you have the 10-year down 8 ticks, 129.05. 30-year down 12 at 148.23. And King Dollar wide break topside here today, up 1 full point and 220 ticks. That's a monster move, folks. It's 1,226 at 94.36. The euro down 232 at 113, and the yen trading up 46 at 118.42. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have out here? Well, we can tell you from high to low out here, folks. It's pretty wild out here today. So you had the European Central Bank come out with the QE this morning. Bottom line, QE is going to be, well, $58 billion a month. Market had the fluctuations, no two ways about that. The S&P, the spread in the S&P today is dramatic, no doubt. There's been a 32-point spread thus far. No, almost a 40-point spread. The low out here today was 2019, and right now we're at the highs. We're up. We're at 2052. No juice. There's still no juice behind this move out there. Right now, the Dow's only done 522 million shares. You know, so that'll come in at about 770. If we actually go look at the SPY, SPY right now, the SPY is trading at a price point of 206.08. We've done 118 million shares thus far. That's going into the 214 million shares, and we'll see. What the SPY has just done too, folks. The SPY, the Dow, S&Ps, all of them, it lunged forward about another 20 minutes ago. We'll see whether it can handle that price point. The SPY is at 206.05, and the swing point, the higher swing that's left over from the 19th of January, the high out there is 206.42. We'll see whether it's going to basically go after that baby. I suspect it's going to go after it. The key is it going to hold that price? So that's one of your benchmarks. The second benchmark is where that downdraft started on the 12th. That benchmark there is 205.48. We take a look at the 3Qs. What the 3Qs have done thus far is this. 3Qs are trading at 103.09. We've done 32 million shares out here. That is going into 56 million shares, and the swing point up the top is 41 million. So bottom line is that, you know, the 3Qs themselves, they're definitely higher in price. No two ways about that. The swing point, there, it's over the swing right now by 45 cents. So if it closes over the 103.65, that means you get game all the way up to 105 again. Gold contract. What do we have with gold? Bottom line, even with the dollar going to the moon, bottom line, gold wants higher price. It has price, it has volume, it has all of the above. The contract out here today, you've done 249,000 contracts. You're trading at 1303, and gold's going to be making its way up to this 1340 area. Silver also has action behind it. Now, silver is trading out at Silver's trading out right now up 26 cents. You've launched the December and the October swing highs. Right now, we are at 1846. Now, this is going to get interesting because 1854. You launch 1854, and silver's going to be at $21, $22 in about a heartbeat. Big number. Bonds. We take a look at the bond market. What we have with the bond market is this. Bond market still refuses lower price. The bond market out here today, folks, the volatility we had in bonds was pretty amazing. The 10-year got down to 128.23, has done 1.5 million contracts, which is light, by the way. Well, it's light. It's going into 1.9 million, and it's held price. The low was 128, the high was 129. It's basically hanging there. It's going to take more to break that market down than we have thus far. King dollar. Now, King dollar, man, King dollar went topside big time. King dollar right now is trading out at 94.37. It took out the highs that it's been hanging around here for about a week, and it took it out. You talk about wide price spread. It has the wide price spread. There's no two ways about that. So what you have with King dollar right now, we are at the 94.34 area, and this is going to be wild watching this shake out because 94.32 was the high of 2003. There's a swing point out there. There's an additional one, though, at 99.57. So we'll see if that is what is going to make its way up there. The divergence, of course, is still that you have the metal market up and King dollar up. So we'll see how that does shake out. You can see flat out, though, that the broad market absolutely loves a strong dollar. It's pretty amazing watching this whole thing shake out. Our phone number is 877-927-6648. We go over and take a look at the XLF, the financials. The financials out here today are filling a gap. That's at 2402. The financials had to gap down the XLF. And inside the Dow Industrials, what we have out here, and see the financials, okay, the financials have bounced 56 cents. You've done 34 million shares. You're going into 46 million shares from January 6th. That's not enough juice either. And JP Morgan, JPM actually happens to be one of the leaders inside the Dow. And all JP Morgan is doing after it came out with its numbers, it gapped away. It's off the highs to 63. You're trading at 57. JP Morgan is filling that gap and filling that gap with lighter volume. So it can get up to 59.40. And you're at 57.59. Bottom line, that gap wants to get filled, and we'll see whether it can get any more juice after that fact. The XLE, the energy sector, basically doing a dead cat bounce also. The energy sector, the XLE first would have to get through the 77.51. Right now it's 77.06. It's going into some monster volume once it gets up into about another point from now. It's still going into monster volume where it's at, but in order to break into a different range, it would have to basically break into 77.51. That's what we had at 77.51, that downdraft. You're talking about 69 million shares, and we're doing 29 million out here today. So it's a big number. Now, oil. Let's go over to the oil market. It looks like oil, folks, wants to take another leg down. CLH5. This has been building cause to get to lower price. And we have with oil out here today, she's trading at the lows. That is really dangerous in the context that you're hammering lows. CRB, let me just get this up here. Okay, so we are hammering lows out here today with 396,000 contracts, and this has been hanging around here since January 1st. So we've had a sideways move, probably about 9 days right now, 9 trading days, and we'll see if, in fact, it's going to break or going to hold. It looks to me like it's going to break downtown. Inside the Dow, industrials that are up 274. The strength inside the Dow, you get United Health is bringing up 421. J.P. Morgan's 174. That's a dead cat bounce. Goldman Sachs is up $5. Let's go look at Goldman. I suspect Goldman also has a dead cat bounce after gapping down. Goldman's done the same thing. So Goldman had gapped down from 196, traded out at 172. You're at 187, 82.37. That's going to fill that gap up. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're coming right back. Dow Industrials are up 278. NASDAQ up at 82. S&Ps are up 31. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC.
How would you feel if you had a powerful decision-making tool that has the ability to find high-probability trading opportunities across multiple time frames in equities, currencies, and futures? Search no more. Take advantage of the best trade with the TAS Profile Scanner. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to help them make the best and most accurate decisions. Scan over 1,000 equities, currencies, and futures instruments for high-probability trading setups utilizing the TAS architecture. As Seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time, for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. Subscribers will also gain access to the December 9th workshop with John Logan. There's no obligation to pay anything. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow Industrials right now up 286. You get NASDAQ up, let's see. Well, that quote was wrong. NASDAQ is up 85. S&Ps are up 32. Gold's up $11. You get silver up 26 cents. And right now, we're going to go over to our man, Mr. Andy Heck. And don't forget, folks, every Tuesday, Thursday, right here at TFNN, 5 to 6 Eastern Standard Time. Andy's got an outstanding show every Tuesday and Thursday. And at TFNN, folks, 8 o'clock in the morning to 6 in the afternoon, we play all live content. You can get it right on your cell phone at tfnn.mobi. If you'd like to get the Tiger TV, put tfnn.com in your browser, and then just hit the TV on the right-hand side. Andy Heck, what's going on?
How you doing there, Tom?
What's going on beside the dollar going to the moon, that is?
Oh, my God. It's hard to fight that trend, huh?
That's a fact.
And, you know, I have to tell you, I have a long-term chart of the dollar up here. And, I mean, you know, we've basically broken out of every level.
Right.
But the interesting thing is, if I go back to the daily chart, with all this kind of up move and long-term up move, historical daily volatility in the dollar is only around 8%. That's low. And that's good because we haven't seen a big price spike, which would indicate any kind of blow off top. And like I said to you on Tuesday, I can't really make any case here for a weaker dollar, given what's going on in Europe,
right,
given what's going on in Japan.
Listen, I understand. I mean, my take was, you know, gold's going too, but it's interesting to see, you know, is that the dynamic now? We'll find out.
Oh, it is the dynamic. And you know what? I totally agree with you on gold. Let's put a gold chart up here. I mean, gold looks beautiful, and gold is just reacting to very low interest rates. It costs nothing.
On
you know, there's no competition.
I know.
Exactly. No competition for gold.
Right.
Hey, the one thing you said about silver, I think, you know, you said 1854 was the big level. And
yes.
I kind of agree. But, hey, September 19th, we broke down from the long-term low at 18.5. And I think it's significant that silver is above that level, is holding, and is looking sweet. I mean, silver is leading gold here. And last year, when we had those downdrafts in gold and silver, silver led. This year, silver is leading gold up. You know, the silver-gold ratio has moved from about 76 ounces of silver contained in 1 ounce of gold value at the end of 2014 down to about 70.6. So silver is leading.
That's pretty cool. Okay. That's really good. And I love hearing that because technically to me is that gold and silver and the equities, they're on their way. They took out the December swing highs, they took out the October swing highs, and they took them out with volume. So that to me is saying that's real. You know, that thing is going.
It's very real. And hey, Tom, all of 2014, you had gold down 4.4%. We're up 10% now.
Yeah, I'm with you.
And what is it? It's January. Let me take a look. January 22nd.
Right.
22 days into the year, we're more than double what we were down last year.
Right.
This is a very, very strong market across the board. I mean, gold and silver are acting like financials. Now, if we turn to the commodity side, the laggards in platinum and palladium, you know, the platinum is a $20 discount to gold here. It's just indicative of how weak industrial commodities are. Iron ore made a new low today, $66 and change at the port in China per dry metric ton. That's a new low. Oil. Hey,
now, when you say new low, you mean going back like how many years? Like this year, last few years?
2009.
Okay, right. You know why? The reason I'm asking that because, you see, Valley's setting up. There's a couple of these that are setting up, and I remember when I was first doing the gold report, what had happened is that when I was doing all this research, this goes back to 2000. You know, Valley had showed up, and a couple of these others. I'm saying to myself, well, what kind of stocks are those? And I remember iron ore then, but iron ore, you know, in 2000 and this is crazy, folks, but in 2002, iron ore was $30 a ton.
Right.
You know,
People
it's like-
forget that. People forget that oil before 2005, the high was $41.
Yeah, I know.
That copper before 2005, the high was $1.60 a pound.
Yeah.
Right. So, you know, we've seen some wild bull markets. Now, let's talk about oil, the industrial commodity. Oil's interesting to me here. I mean, look, I don't know where the bottom in this thing is. I think it's fishing for a bottom around 44, 45 bucks, but it feels very, very heavy technically. And I'm seeing a little divergence today, though, Tom.
Okay.
I'm seeing divergence in the oil products.
I see.
You actually have gasoline up a little bit today. You have heating oil basically unchanged, which means that you have the crack spreads up big. The March gasoline crack spread's $10.55 a barrel. That's up $1.29 a barrel. That's big on a percentage basis. And the heating oil crack is up over $1 at $21.20. Also up 5% today. So you're getting a divergence here where the products are doing better than the crude oil.
Yeah, and that's indicative that where they get, well, it could be getting close to a bottom. That's what,
Yeah,
well,
but
actually, all that really has to happen is that the spreads just have to stay wide, and those companies make money, right?
Well, it's great for the refineries. I mean, the higher these cracks go, the better. That's by the way, that's the total sum total of the economics for a refining company is the crack spread.
Right.
It's a beautiful thing because it's a real-time indicator of profitability for refining companies.
Wild. That is wild.
It is. So, you know, the whole oil sector is interesting. And then you heard yesterday out of Davos, the head general secretary of OPEC saying, I don't think oil's going to go down that much further. It's going to start to creep up eventually. They're starting to say, you know, a couple of weeks ago they were saying, let it fall, baby, let it fall. But now you're starting to get some mixed things. I'm not sure where the bottom for oil is, but I will tell you that with driving season coming up, with gasoline prices so low, you're going to see a spike in automobile sales, at least here in the U.S., maybe in China too. You're going to see people driving a lot more. Demand for gasoline is going to go up. If you're going to dip a toe into this energy sector now, I think that the place to start is gasoline for seasonal reasons.
Yeah. Let's see. So, yeah, I guess, you know what's amazing? You're right. That, you know, folks, it's already January 22nd. We only got, like, what, 90 days to the spring.
That's right. Exactly. And the futures are always reflecting prices, not today's prices. They're reflecting a month, 2 months, 3 month down the road.
It's hard to believe it's already almost the end of January.
Absolutely. But you're getting divergence because, you know, look, the 1 year crude oil calendar spread is trading at 18%. I mean, that's up today again. You know, with crude oil down, let's see, the March 2015 contract's down $1.18 right now. With the March 2016 contract, I got to look over here, is down 16 cents. So that thing went to a dollar wider contango today. These contangos, and that tells you there's a lot of supply around. But it also tells you, hey, you got to love these tanker stocks. And, you know, like NAT has come down a little bit into the kind of mid-10s. These are great plays here with a nice dividend. There are some really kind of sexy trades in the oil patch, but you have to really be careful and very, very selective here.
Yeah, and oil's not going away. We know that. That's the bottom line. I mean,
no, I mean, it's not going to zero.
What does happen, though, folks, is that the volatility is about as intense as you can get. There's no two ways about that. So
absolutely, the volatility is as intense as you can get, and that's the world of commodities, man. You know, when you compare volatility in you know other asset classes, commodities are always much higher.
Yeah, no doubt. You stay right there, Andy. Right? Is that cool?
Sure.
Andy Heck, Tom O'Brien, we want to listen. We want to hear from you, folks. Our phone number is 877-927-6648. Dow Industrials right now up 272. Nasdaq's up 81. S&Ps are up 30. We're going to be right back.
You know what's cool? taking something that's good for you, something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. You get the Dow Industrials up 272, Nasdaq's up 81, S&Ps are up 31. We're talking with our man, Mr. Andy Heck. And don't forget, folks, Andy has an outstanding newsletter. You can test drive it right now for a full month. The way you do it, you go to TFNN, go to newsletters, you go to trading newsletters, you see the technomental commodity report right there. Test drive it for a month, absolutely free. You know, it's going to be interesting here. You know, when we talk about the run that commodities had in general, which they had right across, whether it's softs, you know, the coppers, the metals, from 2002, you know, they had the crash in 2008. You go higher again. Now they basically have been taking a beating, and they've been taking a beating in the aspect that we have fiat currencies that are also lower. So it's going to be really intriguing to watch. You know, the commodities that have got croaked now, can they get up off the bottom, you know?
Absolutely. And you know, Tom, what I've been writing a lot lately about this year is going to be a year to expect the unexpected.
Yeah.
And, you know, everyone's worried and talking about deflation. But, you know, a lot of the actions of the central banks are very inflationary long term. And it can turn on a dime very quickly. So, you know, I'm keeping my eyes certainly on that. Now, I don't like the industrial commodities here, but, you know, they're going to come to a point where the dominant producers are going to gain so much market share that eventually they'll be able to dictate price. And in the next bull market, they're going to make a lot more money. Companies like BHP Billiton, Rio Tinto, Glencore, right, even Valley, who are very low-cost producers, are, you know, they're swallowing a bitter pill short-term in the hope of huge profits down the road. And I think that's going to be a successful strategy for them.
Yeah, and of course, the China's not going to stop growing. What is intriguing? What is intriguing, though? You know, yesterday was the you know, all the numbers are coming out now, folks. The earning numbers, right? And that was the first time. And the numbers coming out that I've seen large layoffs. You know, yes. You know, American Express is laying off 4,000. eBay is laying off 2,500. Now eBay is splitting, but that's a big number, man. We have
those are big numbers, and add to that all the layoffs that are going to come out of the U.S. oil patch.
Oh, the oil's huge. Yeah,
that's huge.
Oil's
I mean,
huge.
That's going to affect our employment numbers certainly. The thing with the dollar is though that it's even if things soften a bit here, it's the best game in town. It's the best yield. Yes. It's the strongest economy. There's really no competition. That's why I continue to think, you know, eventually we're going to see 1.000 on the euro futures against the dollar, and I think we'll see it, you know, this year.
That'd be pretty cool, man.
It will be a hell of a big move.
I think we'd have to have a tiger party over in Capri, folks.
The Amalfi Coast.
Capri.
Exactly.
Capri, baby.
Exactly. By the way, I wanted to go back to something we finished the last segment, which is comparing the volatility of commodity prices to other equity equity prices, debt prices, foreign exchange prices, you know, other asset classes. And here's a perfect example. I have a chart of natural gas up. You know, we looked at the dollar earlier. The dollar's in a long-term bull market since May, and you got volatility about 7-8% on a daily basis. You look at natural gas, that thing's jacking around all over the place. Volatility there, 90%.
Wow.
Right. Yeah. So, you know, it's a different kind of, it's a scary kind of landscape in commodities. And natural gas, very surprising today. I mean, you know, I'm a frustrated bull in this thing, and I know all the technical reasons. And thank God, luckily, you know, we're down in the technomental commodity report a bit in gas in natural gas, but we're up huge in the dollar because we bought some very cheap options. On the dollar. But so you know, it's kind of balanced. It's actually a little bit more positive than negative. But when you look at natural gas here, you had a surprise today. You had a pretty good draw. You know, we're down to 2.637 trillion cubic feet. Okay. And last week we were 11% over last year's inventory levels. This year we've dropped. We're only 8.2% above, and we're 5.5% below the 5-year average. And there's a big snowstorm expected to hit the East Coast, which makes you and I very glad that we live in Las Vegas and Florida, respectively.
And, well, listen, folks, a snowstorm up in the Northeast right now, and if it is a northeaster, watch out, because the biggest snowstorm, I remember, what year was that, I don't know, 70, 60, 73, 70, yeah, 73, I think. I'm not, maybe it was 78. It was summer 7, whatever. That was...
78. I remember I was in Albany, New York.
Yeah,
we had a tunnel into places.
That was February 5th. That was like insanity, folks, okay? It was great. I mean, the city shut down for a week, but that was a storm, man. Yeah.
Exactly. And you know, the natural gas prices will zoom. I mean, the thing is gone from, it made a new low today, but it went last week, it went from 278 to 335. Well, we went back to 276. This thing is up and down like, you know, like crazy, as it should be during the winter.
If you had just a little lighter volume today, well, actually, so the low of 2 days ago is 2809, and right now you're over that, and we did 122,000 versus 148. You might have it here, man. I mean,
maybe we put in a short-term low, but it's all weather.
That rejected, it rejected that lower price. It has lighter volume right there, so
it's looking good. I'll tell you, of everything out there, Tom, to me, gold and silver look amazing.
Oh, I agree, man.
Amazing. I mean, better than they've looked. And you know, I call it the way I see it. There's a lot of times I come on here and I tell you I'm bearish. You know, last November, December, I kind of didn't like them. They just didn't feel right.
Right.
But they have been, you know, the silver's validating the gold and rallying in the face of a strong dollar. To me, nothing better. And if you go and you look at the Europeans and you look at the Russians and you say to yourself, if they held gold instead of their currencies, they would preserve all of their wealth.
Huge. No, there's no doubt.
And that's the case. That's the case.
That is the case. Absolutely. Well, listen, man, thanks for the great education. We look forward to the program. 5 Eastern time tonight.
Great. See you soon, Tom.
Okay, man. Have a great one. Have a safe one. And don't forget, folks, as soon as my program's over at 5, Andy comes up 5 to 6. Let's go to Ronnie in Bartow. Hey, Ronnie, what's going on? Let's see.
Should I put my stops in because the market's looking weak here?
Should you put your stops in?
Yeah, the market's looking weak.
You're going to love it. So when we take a look at this market, too, let's look at this market. Look at inside the Dow Industrials, we look at the Dow Industrials first, okay? Inside the Dow Industrials, what we do have out here today is this, is that you have the UNH, United Healthcare, that's up $4. It's almost up 3%. JP Morgan is a dead cat bounce. That's up 173. Travelers is up $3.11. That has some juice underneath it. So if we take Travelers, let's go take a look at Travelers over here. TRV. Travelers is moving with some strength out here today. Travelers at 108.16. You have volume out here of 555,000 shares. And that baby looks like it's going to be taking out maybe a 30. Yeah, this looks like it could be an ABC structure on the way up. Your first leg is 93 all the way up to this 107. They had to pull back to 103. No, 93. So, yeah, 93. So 93 to 107. You get, what, $13 and 13 on the C point is 103. So you get 117. 117 could be coming at you. Some of the high volume stocks in this market still has low volume, by the way, folks. Out here today is you get Apple up 256, Avon's up $1.19. You have Verizon down 62, eBay's up 373. eBay's got some juice underneath it. Citigroup is up $1.40. You get JP Morgan Chase up 170. Southwest Airlines, LUV, that has some juice underneath it, no doubt about it. That, let me see what, Southwest, yes, AA, there's some action out there. Alcoa, this is some, now Alcoa is the first one that comes out with numbers, folks, and each and every, Alcoa just can never seem to get off the bottom. This has been in a consolidation for years. Well, actually not that bad. It's been in a consolidation since July of 2014. It's trading out at $16, and that little baby also has that high volume low at October 17th, the week of October 17th. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're going to be coming right back. Dow Industrials right now up 263. Nasdaq up 78. S&Ps are up 31. We're going to be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. Dow Industrials up by 260, Nasdaq up 78, S&Ps are up by 29. Let's go to our man Jim in Minneapolis. Hey, Jim, what's going on?
Tom, how you doing, man?
I'm doing great. How you been?
Well, just fast and furious. Actually, my oldest son got married about a week ago Saturday, so that was.
Oh, congratulations, man! That's great.
Number one is out of the barn. So 4 more to go, right?
Oh boy, you gotta love it. That's pretty cool.
Yeah. You were talking about Capri.
Yeah.
That place, isn't that insane? Have you been down there? You go up that chairlift.
I have.
You go up. Unbelievable. You go over the backyards and smell the grapes. I had a big cigar on the way to the top.
Yep. It's an amazing place. There's no doubt, man. Yeah.
Yeah, let's do it. We'll have a tiger party in Capri.
Totally.
Outstanding. Well, I was going to ask you about on the silver front. The two that I own are Silver Wheaton and Hecla HL. I was just wondering your take on Hecla. How high you think that?
Yeah, it's got some action. So Hecla Mining, folks. Okay, it's a silver miner. Does business in the United States and Mexico, so that's the two perfect places for mining right now, no doubt. Low's $2, the high's $2.76. Now, when low to high, that's this year. That's when you go back a year. That's how this is shaken out. This company takes in $123 million a quarter. So you come off the low like the rest of these with a vengeance. You're at $3.50 right now. What this has done is you've now what you've done, and this setup has been really nice. Now what you've done is that you've taken out the highs that were generated in July, and as you're bisecting and dissecting equities, folks, okay, this is a nice one to look at, because what you're going to see, and I'll put this on a weekly for you for a second. Let's see what we got here. Okay. So when you put this on a weekly, what you're going to see is that you're coming up to a higher congestion area, but this is coming up like you want to see something coming up. It's coming up with wide price spread, accelerated volume. It looks to me that this baby is on its way to 470 right now. So it's a big number. And the 470, the way I'm getting at 470, Jim, is this. Now, you have congestion from February of 04, from, let's see, August, of 2013. But this whole area that it just overtook, because of the way these other ones have traded, I've just taken the high of what it just took out, okay, which was the swing point there at 349, and you take the low and it did it out with vengeance, and then, you basically add on the $1.35 to that 335 high. And that's where I'm coming out with this 470 area. But,
Beautiful thing of 470.
I know. Listen, man, and we know, though, what happens, folks, on these small gold stocks, when you get them right, percentage-wise, they're big numbers. Because you're dealing with small numbers, but cash-wise, it's huge. There's no doubt, man. And,
yeah.
And what they've been doing, you know, these small stocks, folks, have been crawling up every day. 2 cents, 4 cents, 5 cents. Before you know it, you know, you get a 50-cent stock that's up, you know, big money. So.
Yeah, I kind of paired it with the silver wheat and the bigger cap name to kind of have a little both.
Oh yeah, well the thing that's amazing to me always is when I see other people actually buy penny stocks, and you know, if they looked around a little, there's plenty of penny stocks inside the gold market, folks, that actually take in money. Like this one is a $3 stock and it takes in $500 million. It's like, oh really? Yeah, you know, 500. They took in Well, actually, they took in 514 million last year. So
yeah, they actually had some pretty good looking bonds too that some guys bought. But
yeah, they do. They do.
Anyway, all right, Tom. Well, great. Thanks, brother. Okay. And we'll see you in March.
Okay, man. Have a great one. Have a safe one. If we stay with that silver, folks. Okay. If we go over to PAAS and you take a look at Pan American Silver, what you're going to see is this. This little baby. We put this on a daily, and what you're going to see is that yesterday, wide price spread, accelerated volume. It took out everything. You know, PAAS, Pan American Silver, the way this is set up, you know, you're trading at $11. That baby wants to, you know, then run here probably $13.41 to $14.31. And it's because of the way that we came down, folks. What happened is that gold and silver had been going down since 2011. It had built cause, you know, it went sideways for basically 7 or 8 months. The first leg down went sideways for 7 or 8 months. Next leg down went sideways with the bias to the downside for about 1.5 years. Then what it did is this. Then it took a straight line move. That was just, you know, heavy. What we're into right now inside the gold and silver market is that you're into the straight line move on the way up after you have built cause, and the cause that we had built is plenty of cause. The cause that we had built is about 17 months. And inside of that cause, you've gone higher with volume, you've pulled back with lighter volume, went higher with volume, pulled back with lighter volume. Now, then you bust it out. That angle on the way down, I suspect we're going to get it just as quick on the way back up. You know, our man, Mr. Larry Pesavento, does an amazing show, folks. Well, actually, he does a great show on Mondays, Wednesdays, and Thursdays, okay? A great show, 1 o'clock in the afternoon. And listen to it, because he was bringing up, it was really cool what he brought up today. And, you know, Larry is a math genius, geometry genius for sure. And what he was bringing up was that the last three, you know, and this is if you're a gold bull or a silver bull, you want to keep your eye on this, because what he was bringing up is that we're right at the cusp of where, you know, these had fallen apart before, you know. And what I've found on these bottoms, like in 2013, you know, we had gold go from 12.24 up to 14.20 in a heartbeat. Then it gave it up. Then in 1 year later, January 13th of 13, went from 12.01 all the way up to 13.75. Now we're making this other run. So my point is that he has great information in bringing this up. And when he was going over it today, you know, I've been inside the gold market, and if you have the gold report, you know that even in the last bottom, what gold likes to do, and it's going to be interesting watching how this shakes out. Gold likes to, and the equities like to, you normally get 3 or more bottoms like this before the breakout actually takes place. And what happens is this. You don't know when it's going to break. What you do know is that if you break with volume, you're going. Well, my point is that the equities have broken with volume on the way up. That's telling me, guess what? The gold contract, the silver contract are going to do the same thing, because the equities, the gold equities, the silver equities are actually leading the contracts. That's what we've had thus far, which is really cool if you happen to be in that market. This is Tom O'Brien. This is TFNN. Dow Industrials up 262, NASDAQ up 79, S&P's up 30, gold up $10, silver up 20 cents, oil down $1.10. We'll be coming right back, folks. You stay right there.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Sam in Irvine, California. Hey, Sam, what's going on?
Hi, Tom. How are you?
Doing great. You having a good day out there?
I'm having a great day. Thank you very much. I want to preface by saying that I'm so grateful to you and TFNN for you to assemble such a great people, such a team to help the small investors like myself.
Well, we appreciate you growling and prowling out here with us, Sam. Thank you so much.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. This quote is by Robert Blunt. Remember that there's a part of life for which you are the explanation. That's a beautiful thing. Market-wise, let's take a look at it out here. We had the Dow Industrials up 259, Nasdaq up 82, S&P's up 29, gold contract up $8.50, traded at $1,302 an ounce. Silver up 15 cents at $18.35 an ounce. Platinum up 11 bucks at $1,284 an ounce. Copper down 3.5 pennies at $2.57 a pound. Light sweet crude off $1.22, trading out at $46.55 a barrel. Bonds, you had the 10-year down 10 ticks, trading out at 129.04. You had the 30-year off 12 ticks at 148.23. And King Dollar, folks, up 1,525 ticks. Monster move by King Dollar. Breakout top side, 94.67. The euro down 275 at 113, and the yen trading up 64 at 118.61. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. We'll start with the SPY, folks. We take a look at the SPY out here. This is what we have happening inside the SPY. SPY has movement out here today in a large way. No doubt the price movement out here was there, folks. We did 159 million shares out here. SPY was up $3, trading out at 206.10. What the SPY did manage to do, we got over the swing point of 205.48. That was the, actually, let me bring this. I have this on a weekly. I'll put this on a daily. Yes, yes. So you got over the swing point here of this, what's it be? Oh, there it is right there. Okay. Of the 205.48. That's where the downdraft was. That's where we had 214 million shares. So you come down at 214, you're up with 159. That's saying it's still weakness. You close over it, though, that's saying you're going to go up to 206.42. And right now we're at 206.10. And we'll see how it attacks that. Realistically, you're right next to these highs. The highs are only at 208.97. The 3 Qs, and we'll look at the NDX 100 through the 3 Qs. What you have with the 3 Qs? 3 Qs also had the price spread out here today. We had volume on the 3 Qs of 40 million, which isn't bad. It's had been going down at 52, but it's still not a bad setup there. Meaning 40 million on the way up. You're at 104.03, and 104.03, what that sets up is that 125.25 is game, which was the December 29th high. It had the 106 isn't game yet, but what we do have is that bottom line, that swing point more than likely is going to get tested. Gold contract. What do we have with gold? Gold wants to move higher also. With the movement with the dollar is pretty incredible out here, folks. But bottom line is that even with that movement with the dollar, gold contract wants higher price. So we'll see how this baby's going to shake out. But gold certainly moved. Sorry about that, folks. Just this is. Okay, so gold moved out here today. We're at 1303.60, and gold also wants to run up to this 1340 area. So last swing high out here, 1323 rather. Yeah, 1302. 1323 is game out here. And we're coming into a Friday. So coming into a Friday in the gold market is always, when gold is up, it wants to go higher. When gold is lower on a Friday, guess what? It wants to go lower. Because what you do have is that who's going to hold the bag over the weekend? That's what's going on. Silver. Silver also wants higher price. Silver moved out here about 20 cents today. Has the price move? Has it all. Bond market. What do we have with bonds? Well, with bonds, they're done, folks, is this. Highly volatile out here this morning, as the markets were, by the way. When the ECB came out and actually did their formal announcement of the $53 billion in QE each and every month, bottom line, bonds got down to a price point of 128.23, then rejected it. We've done, on the 10-year out here, we've done 1.6 million contracts. It's going to need more than that to break down because it's going into a 1.74 to be exact. So we'll see how that shakes out tomorrow morning. King Dollar. King Dollar basically did it all out here today. King Dollar had some heavy movement to the top side, and I'm talking about heavy movement. King Dollar out here, when the QE was announced, you had the volatility inside of it. King Dollar did 59,000 contracts. Now, what King Dollar didn't have, and this was pretty crazy, actually, King Dollar should have had probably, I'd expect like 100,000 contracts, 80,000 contracts. We did 80,000 contracts January 15th. You know, it's amazing we only did 50,000 contracts. But bottom line, did 59,000 contracts, went topside. If you take a look at this on a longer-term basis now, and because we were dealing with the, you know, I was talking about it took 9 years and 2 months in order to get to the swing point that it was at, and that's what it had been testing. It was testing that swing point from 05. That was 92.53. Right now, you're 2 points over that. The next highest swing point up here is a lot higher. Well, actually, it isn't a lot higher. I see. No, it is. It's 99. The bottom of this, yeah, the next highest swing point is 99.56. So you're talking a big number from where we are right now. The divergence out there still is that with King Dollar going higher, gold going higher, silver going higher, you know, is gold a new currency, period? Not a new currency, but is it acting, trading like a currency? And it certainly is right now. Starbucks, SBUX, just come up with numbers here. Let's go see what Starbucks is doing. Starbucks, there she is. Starbucks closed at 83. That's trading at 85 right now. Good old Starbucks, SBUX. Let's see what Starbucks has to say. Numbers on Starbucks go like this. They match the first profit. They match. Oh, there she is. They match the numbers. Okay, so their bottom line estimate was 80 cents. They made 80 cents. Their sales, check this out. This is pretty intense. Same-store sales, folks, went up. Comp sales went up 5%. That's huge. It's amazing, actually, because it's not like their stores are small. Their stores are so crowded, it's amazing as it is. Their net revenue was $4.8 billion in 90 days. Check that out, $4.8 billion in 90 days. That's a big number. There's no doubt about it. No two ways about that. Huge, huge numbers. Maximum integrated MXIM. Maximum integrated, that closed at 33. That is trading from 33 to, no, it's trading at 34.50 right now. MXIM, let's see what they're saying about MXIM. Okay, so numbers go like this. The revenue number was $567 million. They're looking at next quarter coming out at 565 to 605. Their net revenue, this is interesting, it's trading up good, but their net revenue is actually down. The second quarter net revenue is down. Their gross margin is 60%. Bottom line is that they got higher price going. ISRG, Intuitive Surgical. Now this is going to be fun watching how this one trades, folks. Most of the time you see like insane moves with this. Thus far, we don't have that. Thus far, it closed at 525, and right now you have it trading at 527, which is really unusual. It was up $7 today. We'll give you those numbers as soon as we come back. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll come right back. Dow Industrials finished up 259. NASDAQ up 82. S&P's up 30. We're going to be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? EverBank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. EverBank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. EverBank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow Industrials finished up 259, Nasdaq up by 82, S&P's up 30. And as we do each and every Thursday at 20 past the second hour, we get our man, Mr. Basil Chapman. And don't forget, folks, every trading day, outstanding show, 11 or 12 Eastern Standard Time. Basil has a great show. Also has a great newsletter. It's the opening call. The way you get it, you go to TFNN, go to newsletters, go to trading newsletters, the opening call right there. You can test drive that absolutely free 1 full month. Basil Chapman, what's going on?
Hi, Tom. How are you?
I'm doing great. I heard you guys might be getting a snowstorm.
We might be getting a snowstorm, and let's hope that it's not too bad because I'm going to be away the weekend. I don't want to come back and have 2 feet of snow.
You're going up to see your grandchildren? Where are you going? You're going to New York?
Yeah, I go see the grandkids, right.
Cool, man. Cool. Yeah. Awesome. So, what are we looking at, Basil?
Well, as you know, I've been talking about this since December, and I said that there's something very strange going on, that if I'm correct in looking at the Chapman wave methodology as always going to, at least when you're looking at all-time highs, invariably weekly charts go to at least a peak D.
Yeah.
It is very strange for the Dow to fail and the S&P to fail at a B or a C. And that my bias from my opening call has been to have long positions. A little frustrating at times, but at least we've had these long positions and added some today. And there was a really strong move up early on. I mean, the futures were up 20 in the S&P.
Right.
And then sharply down, just a complete give back, and then even stronger to the upside. And the close has the Dow up 260 points at 17,813, which made a very big difference for the chart pattern, in the sense that it was really struggling. It was really IBM related with the Dow and just couldn't get out of its own way. But because there was this beautiful candle, I have a technique that I call the Chapman Wave inside wedge target zone, and that says that as long as the support of the 9-period moving average at about 17,600 holds over the next few days, we should have higher highs, and this dashed line will become the resistance, but it's also what I call a target line. If correct, then we should see 18,104, which will be $1 above the previous high of the 26th of December, to start that leg up. That's the daily, and I'll show you why I need it, because in the weekly chart, let me just move this over here, this particular chart right there where I've got that yellow oval sign, it's what I call the Chapman Wave stalk leg formation. You've got a powerful leg to the upside, you get that oval, and that suggests that at 18,104, we'll finally get that leg D, the missing link to this whole thing. But you can see it's within there's a lot of resistance up at about the 18,250, 18,300 level. So I don't expect a whopping breakout, but what's very interesting about this, and of course, all of it depends on the Dow holding. If it gives back like it's been doing this yo-yo dance and it gives back all the gains within the next 2 days, that's not good at all. But look at the S&P. The S&P is just a lovely, it's really, look at this. I'll expand it out, and you'll see this up channel. It was broken once, that October low that went down to 1820. This is the S&P 500. Look at that channel that it's been in. Every time it's gotten, I call this, within the up channel, there's something I call the inside track. And that inside track shows within, I always think of it as like an eighth of an inch or something like that. Within that boundary, whenever it gets to the upper part, it gets repelled. And on the downside, almost every time, except for that October period, when it gets to the lower part, it manages to bounce, and it's just done that. Now, of course, we have to wait for Friday at 4 o'clock. Tomorrow at 4 o'clock, we'll know. But so far, it's above the 9-period moving average. The technicals are okay. In my show, the Target Conditions Hour tomorrow between 11 and 12 Eastern Time, I'm going to be going through all these technicals, and we'll have a lot more evidence as the market's unfolding by 11 o'clock in the morning. But most importantly, if there is a high above 2,093.55, that starts leg C. Now, because I expect that the tradition is always to get to at least a D, that says that we could have nominal new highs going into early February. So far, everything's on track. And one of the most important indicators that I use, and I've spoken about this for, I don't know how long, as long as I've been with TFNN, I've spoken about the VIX index, the volatility index. And you can see, look how that's pulling back. It's at 16.40. That's a big move from the high that it made just a couple of days ago at 23.43. It's down at 16.40. So, and I call that buying pressure and selling pressure. So if the VIX at 16.40 starts to break into the 15s or lower, that's going to give the impetus for the market to go higher. And if I'm wrong, the VIX will quickly go back to the 20s, and this will stall. But so far, from the stocks that we added in our portfolio for my opening call over the last couple of days, it looks to me like we're rotating, and that some of the stocks that were fantastic had quite a bit of a dip over the last couple of days, and other stocks that have been just languishing are starting to come alive. And a lot of them are the cyclical, the heavy-duty cyclicals. So we'll see if that continues. But absolutely fascinating market, as you said. The dollar breaking to a recovery high, gold at highs, bonds almost at highs, had a bit of a pullback today. This is a remarkable market.
And listen, folks, don't forget, every trading day, 11 to 12 Eastern Standard Time, you can listen to Basil. And, of course, TFNN, we start off live programming, 8 in the morning, 6 in the afternoon, 8 to 6. Right on your cell phone, TFNN.mobi. You can get Tiger TV at TFNN.com on your browser. Then just hit the TV. We got to keep you warm. We got to keep that snow away from you up there.
I hope so. I hope so. Although we can't complain, we haven't got any snow on the ground. I'm looking out. There's not a spot of white out there on the ground.
So what is the talk up there with Deflategate with Belichick, Belichick and the Patriots?
You just have to shake your head and say, why would a team that's doing so well, that has such fantastic players, even think of doing something silly? I mean, It's just, it puts, it leaves it's just got a bad taste, so that no matter how well they do, that's going to be the legacy. It's just going to sit with them. That was just wrong. Whoever did it was just plain wrong thinking. It's so sad because they work so hard. It's a great team.
No, I know. And, folks, Belichick made a statement this afternoon that he's shocked, okay, that in 40 years,
did he?
In 40 years, he's never even thought about the footballs because of the fact that the league gives them out. And listen, that can be a fact. We'll see how many animals they got on the team, though. But the bottom line is that someone deflated those balls.
Yeah, I mean, 11 out of 12. If it was
exactly.
1 or 2, you could say, hey, big deal. So what can you say? It's very sad, actually, because legacies take a long time to build, and they can be broken in just
I know. It's crazy, man. I mean, I'm still going to be rooting for them, but it is a sour feeling in your throat, man. Do you know what I mean?
That's right. You just shrug your shoulders, roll your eyes, and say, what for? I mean, what was the point?
Yeah. And listen,
when it comes to sports, it's a little bit like the stock market. You're as good as your last win.
Yeah.
But if there's this overhang of something that has a big question mark, that's not good.
Yeah. No, I agree, man. I agree. Well, listen, we look forward to the show tomorrow, man. You have a great one and have a safe one.
Thank you very much, Tom. Have a great evening.
Thank you. And there's no doubt, folks. Again, the context with the Deflategate. Bottom line can be just one person out there deflating those balls. Who knows? Yeah, it will make the Super Bowl interesting, no doubt. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow finished up by 259. Nasdaq is up 80. S&Ps are up 30. We're going to be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. The Dow Industrials finished up 259, Nasdaq up 82, S&P's up 31. And, you know, the currency moves out here have been phenomenal. And a lot of these funds, not a huge amount of funds, but there's been plenty of funds that have lost huge amounts of money. First with the Swiss franc, but something that came out of nowhere was the Canadian dollar also. Just coming across the tape out here, a couple big dudes inside a fund, they just lost their jobs just on the Canadian dollar. So when you do look at this Canadian dollar, what you're going to see is this. The Canadian dollar right now, it's at $1.24. If you pull this baby back, what you're going to see is this is getting weaker and weaker, you know, in correlation of the dollar. You know, it's on its way to $1.30. You take out $1.30, and guess what? You're going to be all the way back up to this 148. So that's pretty intense in itself. There's no doubt about that. The Aussie dollar, and this is the commodity deal, no doubt. The Aussie dollar just went under 80 cents. So that thing is getting weak in an extraordinary way, too. So what does that do? That gets us all, folks, on the plane, whether we're going to Europe, going to Canada. Of course, for Canada, it's a great place to go, and it's really right next to us. The Aussie dollar would likely is on its way back down to this 67 area. Pretty intense. Let's go to Jay in Boston. Hey, Jay, what's going on?
Hey, Tom. Listening to you and Andy, and I'm tossing around the idea in my head of getting into USLV, and I'm wondering if well, first of all, what do you think of the concept, and number two, what a good entry point might be?
Okay, so let's take a look at it. The USLV, these are velocity shares, 3 times silver ETN. So bottom line is that what you're looking for is you're looking for acceleration inside the silver market. If we go pull up silver right now, and we take a look at silver. Okay, so silver is moved with force. There's no, just as gold is done. We pull this and look at this on a daily basis, and what we have is this. You're at 1836. Now, silver and this USLV, you know, has just gone from, what, $18 to $30, right? Yeah. I mean, it's been quite a move.
Yes.
I would keep this on the burner, but I wouldn't buy it right now. You know, I mean, because if you're going to buy it, what I would do is this, Jay. The silver contract itself, the high of 1854, wants to get taken out. I would let silver prove itself that it can get that area out, and then, you know, then the expansion is going to be, you know, a bit more, so you'd be looking and saying, oh, man, if I gotten that, I would have made money. But then I'd buy the pullback, you know, because that is one way of doing it. The second way of doing it, tomorrow morning, if you get a pullback, you're at 1836, you get a pullback 1786, and where I'm going with that is the top of the high on Monday.
Yeah.
You get it. It comes down there with light volume, you get action, then you get some action, you know. If we take a look at the USLV, folks, okay, it has juice, you know. The problem with something that has already got this quick, of course, is that, hey, you know, a normal pullback can take it back quite a bit.
Yeah, yeah. That's
but silver wants higher price. So gold wants higher price. The silver and gold equities have actually led this move higher. And when the equities move first, it's really a good situation. And specifically, the way you can tell that, folks, is this, okay? You know, when looking at here, I'm going to put the XAU up first so you can see how this shakes out. So if we put up the XAU, in fact, let me put up the HUI. The HUI is a gold bugs index. So we put up the HUI. What you're going to see is that the HUI right now is at 203. The congestion area is all the way down there at 173 first, and then you have the area at 188. Well, the HUI is way above that, where when you take a look at the actual contract, and what we're talking about here is that the equities are ahead of the contracts. Well, I guess it's pretty close, because the gold is over them, too. Gold is over them, too. Gold got over them on Monday. Bottom line, they want higher price. You know, what I would do if you like that metals market, You can certainly trade the triples, trade the doubles. What you want to do is wait for a pullback. But if you do like that market also, find a few of those smaller stocks. The big ones are moving, but the big ones won't go for 10 for 1. The smaller ones can go for 10 for 1 with you, because it looks to me like this move is going to be extraordinary. Here, I'll bring up, if you want to see something that's amazing, folks, I did this on the workshop last night when I was doing the workshop. I'll bring up, I want to show you something. I'm going to bring up the GLD. And if you take a look at this GLD, and I'm going to put this on a monthly basis, what you have, the GLD, folks, trades at 10% of the price of gold. And the GLD, you know, we went straight. The GLD very well could be a ABC structure on the way up. That's the bottom line. And it's a monster, too. The A point would be 66, which was the low that was generated in October of 08. The B point is 185, which was the highs. Now, at the highs in the GLD also, you have volume. So, okay, that's going to get tested. Now what you have, which is really cool, is this, is that when we came down all the way from 011 at 185, the first leg took you down to 114. Well, at 114, this was so cool because all you were doing was going back into where you were breaking topside with light volume. You know, first time we came down with 454 million shares, and 454 was going into 570 million. Then we got to a lower low with 254. We tested that lower low with 185. Then we tested it again 2 months ago with 147. So watch how this goes, folks. 147 was just 2 months ago. That was testing 185. That was testing the test of 254. That wasn't even close to breaking down because it was basically going into the 500 million. So your correlation is there. That's the bottom. What has happened going topside is even better. When we came off that bottom, the first month was 153 million, and we've already done 140. And what that sets up is that it could be an ABC structure on the way up. I suspect right now I'm confident enough that the GLD wants to go to 1540, 154, so that's gold at about 1580, man. So.
Yeah. Do you think we're on the verge of a multi-month move here?
Yeah.
In the metals?
Yeah. Because yeah, I do. I do.
Yeah, that's my spidey sense of it. Yeah.
It's acting correctly. It's particularly acting correctly. The reason that it still blows my mind that the dollar is going higher and gold's going higher. And, you know, when the dollar was at highs, gold would not back off, folks, okay? That was saying so much. It was amazing, okay? And, you know, as our man Andy was saying when I was interviewing him, and there's no doubt, we're at negative interest rates, never mind low interest rates, okay? And do you remember how many years, folks, that you know, the pundits would always be like, don't buy gold. Gold costs money to store. It used to crack me up when they said it costs money to store. It's like, don't any of these guys have a safety deposit box? In a small safety deposit box, folks, you can put $1 million worth of gold. Okay, so that's a bunch of BS when they're saying that. But now they can't even say that because now money, cash, costs money to put in the bank, folks. Cash costs more than gold costs to store. How's that? Is that sick or what?
Yeah, I can't remember seeing in my lifetime. I don't really remember anything like that.
I never knew there was such a thing. I never knew people were going to pay money to put money in the bank. That's insane.
It sounds like an idiot test to me. You know?
It is, man. Well, listen, we all should be bankers. That's crazy. Hey, listen, I have something for you. Guess what? Give me your money, and I'll hold it for you. But just because I'm not going to hold it for you, you're going to pay me to hold it for you. That is like total insanity.
Yeah, man, I still got my mattress. What the heck?
Exactly. They didn't grow up in the city. What the heck is wrong with these people, man? You know what? This is a heads up for all you people out there, folks, okay? You do. Just Jay said, you know, you get a mattress, okay? You get a place to stash it. It's crazy.
Oh, yeah.
Cooking, brother.
Yeah. All righty. Thanks, Tom.
Have a great one, man. Have a safe one. Let's go to Rich in Orlando. Hey, Rich, what's going on?
Hey, Tom, how are you today?
I'm doing great, man. You having a good day out there?
It's a beautiful day here out in Orlando. It's really nice.
Yeah, no doubt, man. No doubt.
On this GPL, it's moved along. It just doesn't seem to necessarily have any fire relative to the other silver equities. What are your thoughts?
Let's take a look. You get Great Panther silver, folks. The low is 55 cents. The high is 149. I like how it, you're absolutely right about, like, okay, what's going on here, man? Is this thing going to move or not move? I like how it traded today. Yesterday, it needed more volume, big time, and it does need more volume, more price spread. There's no doubt about that, because it's a laggard. We haven't got the juice underneath it yet, but that's what you need. You need wide price spread, accelerated volume on this movement.
But as far as it looked fairly good to you, yet as far as the holding, I do own it. I own it.
Stay right there.
Okay.
We'll come right back with it. You stay right there, folks. Come right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Join Andy Hecht as he shows you how to make money in commodities. The Commodities Hour, next on TFNN.
Tom O'Brien.
Welcome back, folks. 877-927-6648. Let's take a look at this. This will be interesting. We'll have to have our man, Mr. Andy Hecht. He'll be working on this, I think. But this just came across the tape. So United Southwest shed their hedges as fuel seen holding their 5-year low. United Continental Holdings Southwest have shed at least part of their protection against rising fuel costs this year to fully benefit from the price expected to remain near 5-year lows. Southwest unwound hedges on all its fuel consumption this year and in 2000 and up to 2018, while United closed out most of its remaining first quarter positions, airline officials said today. Man, this is interesting. United had been working to close some of the wrong way purchase contracts, pushing about $80 million into 2015 hedge losses into the fourth quarter. These guys sound like like the gold companies, folks, closing out their hedges. So check this out. If I just put, I got Rich. We're going to be right back to Rich in a second. But if you put the gold contract up, so when gold was at 1900, right, you had Newmont closing out their hedge, folks, that they had on there forever. This is going to be really interesting because when they're closing these hedges out, these hedges, folks, are not getting closed out and they're making money. These hedges are getting closed out and it's costing them money. This is going to be wild. And don't forget, our man Andy's coming up next. We're talking with Rich from Orlando, and we're talking about Great Panther Silver, GPL. So what you have is, the technicals inside this baby are set up that, first off, Rich, they want to go to 91. So your 91 that's hanging out there November 19th, I expect that we're going to see that. I'd like to see it, within the next week and a half. The way that it traded out here today, it very well could be, a small ABC structure on the way up. And that's what a few of the others have done. They've taken the B point out, they've taken it out with volume. But we want to see it get up into that area. What Great Panther does have, and this is what's really wild about Great Panther, folks, is that it has a high volume high out there at the $5 mark. So,
Tell one thing with Great Panther, Tom. Do you know what happened on that December 22nd day with that tremendously high volume?
Now that happened.
20 million shares.
I believe if we look at, let's look at a few others like that. I think what happened, that was the, I think it was a indice that, let me just look at a few others. December 22nd we're looking at, right?
Right.
I think it was a rearranging of the indices themselves. Because I remember one day, and I'm not sure, let me go look at IAG for a second. I remember one day we had huge amounts. That was December 19th. Yeah, no, that's what it was. If you go look at a few of these, Rich, here, I'll bring some up right now. You'll see.
IAG is doing the same thing.
Yeah, they all did. They all did. That was probably a rearranging of the small cap index or something.
Oh, okay.
Well, there's IAG. Let me just see. Oh, one we do want to look at, folks. Yesterday, what you had is that you had Eldorado. Now I own GPL. Yeah. Eldorado I don't own. Okay, but Eldorado is strong. And then yesterday it got a downgrade. It goes from $7.95 down to $6. But check this out. Now I haven't bought this yet, but this is pretty cool. You want to watch how this shakes out, and this is why. When I was watching it yesterday, I says, you know what? when you get smoked, folks, on the way down, or you get really expansion volume on the way up, and you can't take out a swing point, it means a lot. And El Dorado couldn't take out its lowest swing point. You know, so this is something you want to keep your eye on, man. I don't plan on buying it just yet, but this is a strong stock, man. And when I was watching it yesterday, I said, man, this is interesting they can't take that swing point out. But, you know, we'll see. But to go back to Great Panther again for a second, what Great Panther does have, just like the GLD has, is that it's a high volume high. It's a doji high volume high, too. So it's going to be wild watching this shake out. We've definitely been patient, there's no doubt. Because the last time that this, you know, went, of course, the whole gold market was going, but, you know, it went from 75 cents and it went up to 504 in 4 months. And, you know, see, and with a high volume high, you can expect to at least get the bottom of that tested. The key is that this hasn't started moving yet, folks. But when this starts moving, that's where it's going to go. So
let's go into the bottom of that high volume high is what? What is that? 5?
The bottom is 355. You know, which is still a nice move. You know?
Oh yeah, no, from where we're at, that would be marvelous.
Yeah, that would be intense. There's no doubt about it. That'd be just like buying an IPO, folks, pre-market, meaning that that you're actually in before it went out to the public. Because that's how few of these have been trading too, by the way. You know, there's no doubt about it. One we also don't own yet. There's a couple other smaller ones that we don't own yet that I'm watching that have some real juice underneath them. So what has happened is that the smaller explorers have got juice underneath them. That's a good scene too. Now the larger companies certainly don't have the money yet to buy them, but if gold keeps moving, what has happened in that whole area, folks, okay, is that when there was a bull market, all those companies could get as much money as they want. Now they haven't been able to get money. I suspect this move in gold and silver, this is helping tremendously a lot of these smaller ones, because what you will see is that they'll start pushing out into the marketplace. They'll be able to do debt offerings. They'll be able to do equity offerings. So.
Listen, thank you very much, Tom. I really appreciate it.
Okay, man. Have a great one. Have a safe one. And don't forget, our man, Mr. Andy Heck's going to be coming right up next 5 to 6, growling a problem with you out here, folks. If we do go over and we take a look at the XAU, we looked at the we looked at the HUI. If we look at the XAU, what you have happening in the XAU is this. This is the. There she is. Oh, I see. XAU out here is trading out at 81.12, and this little baby, folks, okay, 82.53. You launch 82.53, and I suspect tomorrow it's going to try to do it. You launch that area, it's going to be a fast and furious move up to this 94 area. The reason being, it was just fast as furious on the way down. It's built a nice little base. And then what you'll see happen, this is what's going to be really crazy. If that's the case, I'll bring this out a little bit more. What you're then going to see is that then you're going to see a cause building aspect for probably another year after that. And that'll drive everyone crazy. The reason I'm saying that is that, see, it has no flack going up to this 94 area. But then as soon as you get above that area, what we had done is we had built cars for quite a way before we went down. But then we get a call from Rick from British Columbia, because then that's a huge head and shoulders bottom. You stay right there, folks. I'm man, Mr. Andy Heck's coming up with you. And always remember, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, fly with it. Thanks for being here, folks. Have a great one, safe one. Look forward to speaking to you right back here tomorrow. Go get them, folks.